Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Let's start off first with the dollar. The dollar index has had a quiet session, but we do not see those emerging market currencies in the dollar index. PCE index with the Fed's preferred inflation indicator was in line with expectations, 2.0%. So as expected, it was more of a quiet, muted reaction to that number. But with the emerging market currencies, the Argentine peso, the Turkish lira, the Russian ruble, with all of them falling, the dollar outside of the dollar index in the real global scheme of things is actually accelerating higher. But that's weighed on commodity prices, and you haven't really seen that in the currencies we are trading here, the ones we're talking about. So let's get to those. The euro did fail against major three-star resistance. It struggled up there. We've had this on the FX Rundown all week, but we've also had major three-star support very near, just below the market, and it is testing into there, right around 116.5. You'll see that on the FX Rundown earlier in the week. So it's consolidating. This is actually constructive after such a nice recovery all through last week. But what it's going to come down to is tomorrow's Eurozone CPI number. This is a fresh August read. If it comes in better than expected, we'll have a nice consolidation with a strong close in the euro to finish the week. If it misses, if it comes in light, we're likely going to see a move below major three-star support, and it's going to signal longer-term consolidation. Regardless, we remain longer-term upbeat on the euro. We think there's a lot of value down here in that longer term. Doesn't mean you need to trade it right now, though. Moving on to the yen, nice recovery day for the yen. Of course, we've talked about those emerging market currencies, and with geopolitics ticking up and what's happening around the globe, the yen is waking up. So it's recovered from that fallout of a bear flag we talked about yesterday, stabilizing really well. You want to watch the yen testing resistance around 90.40 to 90.50. If you can get out above there and close back above there, it neutralizes the recent weakness and signals that this is not just a snapback on a short-term geopolitics scare. Now moving on, you have a lot more of a dicey trade in that Aussie. It's pretty much lights out. It hasn't taken out the low. We talked about it yesterday. We said if you are a seller, you know where to put your stop. You just get that stop above the high and you try and ride the wave lower. We have a long-term major four-star support level in the Aussie, all the way down about 71.5. Right now, it looks like it's on its way to taking out of the recent low and testing that. But what you have to keep an eye out for tonight is Chinese manufacturing data. This is going to be a key number. China is Australia's #1 trade partner. This comes out at 8 o'clock p.m. Central Time, so watch out for that number. And as well, I think we forgot to mention data coming out of Japan, along with that Chinese manufacturing number. Out of Japan, you have Tokyo CPI and industrial production. This comes out about an hour before that Chinese manufacturing number. So keep an eye out for all of that tonight, as it's going to move the Asian markets. And then lastly, touching on the Canadian. It did get above our major three-star resistance. We talked about this on the FX Rundown written report earlier in the week. However, it struggled to maintain out above there. Doesn't mean that the market is not long-term constructive. It's been very constructive off the lows. We are seeing some profit taking, with NAFTA, or what is the new NAFTA in the headlines, and the uncertainty of whether they're going to get a deal signed by Friday. You're seeing some profit taking from the recent move in the Canadian. Not only that, GDP data missed expectations today. So you have to look towards raw materials price index tomorrow is going to be moving that. But if the Canadian starts to follow through to the downside, we don't like being a buyer here. We like being a buyer in the longer term. But being a buyer in the longer term, you have to be patient for your price. And there is a lot of support in the Canadian down about 76.25 to 76.40. Watch for that level to get tested. We at least find it for a buy the first test opportunity at that level. Give us a call. We're here to talk about anything on the board, currencies, commodities. We're here to help. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.